Good morning, everyone. Happy Friday. Today is August 22nd, 2014. Now, today in our daily briefing, I want to look at two e-commerce juggernauts. Now, these are multinational players. You can call them pure play e-commerce providers, e-commerce firms. However, they both have multiple offerings in multiple countries across different channels and different product and service offerings. Now, the two companies that I'm talking about are Rakuten out of Japan and the U.S.'s own Amazon. Now, the big news here is that Rakuten announced that they have purchased a e-commerce application based here in the U.S. called Slice. Now, this is primarily an analytics and data move. However, it could actually set the stage for Rakuten to actually formally enter the U.S. market, which it didn't do after it acquired Buy.com in 2010 for $250 million. Now, this also comes on the heels of the firm's announcement that they were opening up a $100 million venture capital fund to invest in startups all over the world. Obviously, if you look at startup activity, there's a huge amount of activity, a huge amount of money coming into different startups. Obviously, here in the U.S., primarily on both sides of the coast. But more importantly, I think this is an interesting move when you actually juxtapose it against what Amazon is doing in Asia. Because if you take a step back, Rakuten has significant operations across Asia. It has operations in Taiwan, Malaysia, Thailand, Indonesia, and obviously Japan. But it was less than successful with its Chinese joint venture with Baidu. Sorry. Now, like I said, let's compare that to what Amazon actually is doing in China. So Amazon actually this week they announced that they're actually setting up in Shanghai's free trade zone. Now, this is interesting not only for its play against Rakuten within um, uh, the larger Asia region, but also within China against Alibaba, which is obviously the largest e-commerce provider, definitely dominates the Chinese market. So I think it's interesting if you actually compare both opportunities. So you have a Asian firm potentially entering the U.S. market, and you have a U.S. firm definitely entering the Asian market, obviously with China as its base of operations. So I think this is definitely something to watch, and we will see what happens. We'll see what transpires. We'll see if either company is able to successfully navigate the waters, so to speak, with respect to opening up an operation in a new country. Obviously, I'm talking about different cultural implications, cultural impact. But then again, both of these firms are multinational, and they have a tried and true model that works for entering new foreign markets. So we will see what happens. I know that I'm looking forward to tracking this story as it progresses. So have a great weekend. Bye.